My name is Cunningham. I am here with Lynda Dimond and Darren Merritt from Keller Williams. Today, we're going to talk about the San Francisco Bay Area real estate market, whether to get in or get out, or just stay in it, I guess. This is very important. I'm a lawyer. Lynda and Darren are real estate professionals, and this is not legal advice. It's not real estate advice. Don't look at this and go do a bunch of stuff, but you always want to work with a real estate professional or other professional in a real estate transaction. There's a lot of stuff that can go wrong. If you're watching this on YouTube, please subscribe to our YouTube page. You can stay abreast of our content. This is me. I'm Jim Cunningham. I'm managing partner of Cunningham Legal. I'm a certified specialist in estate planning, trust, and probate law. Over 25 years experience in trust and estates. We have offices in the Bay Area and the Sacramento region and Southern California. I'm securities and insurance licensed. I'm also a licensed real estate broker, but I don't sell any of those things. I stay in my lane as a lawyer, but I'm kind of a little bit of an exchange. So we have I'm really excited because we have two people here today, and we're going to talk about two different segments in real estate. Lynda's going to discuss residential real estate trends, and these are trends in the San Francisco Bay Area. So if you're watching this, you're definitely interested in this. We do have two more webinars that are after this that cover the Los Angeles market, as well as the Sacramento region market. And Darren Merritt will discuss commercial and industrial trends. So what's going on in the commercial and industrial? That includes office, that includes manufacturing, and a whole bunch of other non-residential type properties. And then again, ask your questions in the Q&A. And if you're watching this on YouTube, you can post in the comments, and we do answer those comments. So we have a couple of questions that we'll get to in a little bit. So Lynda, I'm going to introduce you. You've been in real estate since 1989. You're a phys ed and English teacher by trade. Before that, you're a licensed real estate broker. And this is interesting, a member of the Women's Council, a Realtor, as well as a leadership training graduate through the Women's Council Realtor. Really interesting that you're taking a leadership role in that and teaching, and just getting to know you in preparing for this. I'm really excited to hear what you have to say. And you also, real estate is Lynda's cup of tea, because where are you from originally, Lynda?
Well, I'm from England originally, and still managed to keep the accent, even though I moved to the Bay Area in 1986.
Hence, it's why it's your cup of tea, or you say cuppa?
Cup of tea.
All right. So let's get to it. Lynda, let's talk a number of homes for sale versus pending, right? And let's look at May 20th to July 2021.
So these statistics are for Contra Costa County. I can do this for any county. I can even narrow it down for a city or a zip code. So those who are listening, if they're interested, I'd be happy to share something for them. But what this does is it kind of gives us a snapshot of what's been going on in the market over the last year. So the light green are homes that were for sale that month, and the dark green are those that actually closed escrow that month. And then the red line are homes that went under contract, which we call pending sales. So you can see it's been kind of up and down. Obviously, May, we were just beginning to be able to show property of 2020. And at that point, it was still vacant homes. And then in June, we were able to start showing homes that were occupied with a lot of precautions in place. So that's why you're sort of seeing the graph slowly start. It's good that we're kind of around that time, May. And if we move towards what's happening now, you can see if you look at kind of February, March, April, suddenly the inventory is extremely low. And we have a massive increase in sales. And that's where we had a big bump up in pricing because of the supply demand situation. We had less homes than we had buyers. So things were just flying off the shelves with multiple offers going on way over the list price. So we were cleaning out our inventory pretty quickly. We've seen a bit of a slowdown as the summer hit, started around June. You can see that the number of homes clicked up to 647 from 434. So we got more inventory on, and it's beginning to increase. It'll be interesting to see what the statistics are by the end of August, but I expect an increase in inventory. We're still seeing some good sales, but definitely we have more homes for buyers to choose from. So that's actually a great thing for those out there looking for a home.
You know, I'm looking at this graph, and in almost every instance, there are more homes sold than there are homes for sale. Does that mean that some of them never hit the market?
It could do, or it's also that they went pending and they're closing from the month before.
Okay.
So, you know, some of the inventory that went pending the month before is now closed. That's why it's higher the next month.
Okay.
So that's why it shows more closing than, so it really shows what's coming on versus what's coming off each month. So it doesn't actually show the current inventory. It just shows what the new listings were.
And how many people live in Contra Costa County?
That is a good question.
A lot.
I don't actually know the total answer to that, but I would say, Darren, I don't know if you can help me out on that one.
Maybe, I don't know, 1 million?
I know 120,000 is in Concord, and there's about 30 in all of the other cities.
Yeah, that's not that 700. What I'm getting at, those 732 homes for sale is not a lot of homes, right?
No.
I mean, it's
1.2 million.
Thank you.
1.2 million. I mean, that's bananas. That's hardly anything. Okay. So it's interesting. Are you seeing a slowdown in the market, or is it still just charging ahead and there are just more homes available and there's still enough demand to soak up the homes that are coming on the market?
And there's not kind of a simple answer to that question. I think it's very much city related and also price sensitive. Okay. I'm going to take the largest city that's in Contra Costa County, which is Concord. And kind of the entry level right now is around the 700,000 range. I sell a lot of homes in that particular price point. And I have seen showings go from an average of 30 to 70 a weekend to down to like 5 to 10.
Oh, so you are detecting a little bit of a slowing in the market, not the craziness.
However, there are other price points where that kind of activity is still occurring, particularly if you have a house with a swimming pool. That is a hot commodity right now. So anybody who's thinking about selling who has a swimming pool, it's, you know, that is really very much in demand.
So we have 3 questions. I'm going to answer these quickly. JL asks, what do you think the chances are that Prop 19 will be changed in Partner in Full regarding inheritance of real estate? I don't see that changing. It's a remote possibility. Will Biden lower the estate exemption to $3.5 million and remove the step up at death? That's part of his proposal. The Treasury's Green Book is to remove the step up in basis at death, but they're leaving the death tax exemption in place at 11.7 million. But what they're looking at is triggering a capital gain over a certain amount. So it's a backdoor way of raising taxes. Does buying a more expensive house offset the gain of selling your current house? No. There's no equivalent 1031 exchange. We are having a 1031 exchange webinar, I believe next week. I would encourage you to look at that. Susan asks, so this is a good question, Lynda, for you. I'm interested in your opinion about selling a rental property that has 2 units with tenants in place. How does that work, Lynda? If I'm selling a rental property with tenants, what do you think about selling a property with 2 tenants?
Actually, just involved in a very similar situation a couple of months ago. And there was a good, strong demand for the property, and we kept the tenants in place. It was actually very advantageous for the purchaser to know that they already had a tenant, although very aware of when are those leases up and what are they currently paying in rent versus what's the going market. So I think, you know, there's a few things coming into play, but I definitely see a market for a duplex in particular is a very hot commodity.
Yeah, I mean, I would think because you could rent one of the units out, that helps you qualify for a loan, right?
Well, yes, if you're planning to live in one of them, then absolutely. Right. Yes.
Yeah. David asks, I have a senior father who's moving to a senior care facility with a principal residence with a low cost basis and significant unrealized gain. So bought it for a low amount. Now it's worth a lot of money. To maximize tax benefits, we're holding off selling to take advantage of the stepped up basis opportunity, ostensibly at death. What recommendations do you have regarding renting the home in either a long-term lease or short-term vacation rental? The home has a pool. So what do you, Lynda, are you in that market where do you talk to clients about that? Are people buying properties to put them out on short-term vacation rentals? What are you seeing? Is that a hot market? Not, is that a pain?
Not really seeing people buying it for that intention. I haven't really run across that. I mean, obviously there's always some risk when you have a home with a pool, insurance wise.
Well, that begs the question then, if it's a long-term rental and there's a pool.
Well, then there are definitely some documents in place for that to help cover the landlord. I think on as far as a, you know, like an Airbnb type situation, I'm not real sure.
Okay. All right. Well, thank you. So we have number of sales in this year versus last year. What are we seeing? What are the trends?
Well, basically, we're, you know, seeing a slight uptick in those. And in fact, it's actually probably better if you just go to the graph, the next page. I think that would be, oh, there we go. Oh, sorry, that's an average price per square footage, sorry. Yes, so the trend is last year versus this year, there is definitely an increase, because we have to remember that last year we were still in the pandemic. So we're up about 13%. But month to month, we're actually down a little bit from the prior month before, which I know some of it we're seeing is that seasonal. Is it because everyone's gone on vacation? We're waiting to see that. And then,
Oops, there we go.
Yeah, and
Use your air here.
square footage has definitely jumped up from a year ago.
Yeah.
You know, as you can see, it's been quite a big increase.
Of for sale. What do you think's accounting for that? Is it?
Well, it's supply and demand, definitely. We were up about almost 30% from a year ago. And most of that jump happened really in that sort of February through May time point.
Was that kind of the pent up people who are like, gee, I don't know if I want to sell my property because of COVID, and now things started loosening up and you think that was kind of it?
Yes. I think, you know, January, February, we were still in a little bit of a lockdown.
Yeah.
And then things started loosening up.
Homes for sale, July 2021 is up 13%. Homes closed is down 6%. So that is an indicator that of a cooling market, but it's still a seller's market.
Yes. I mean, it's not a huge drop, but it is, we're beginning to notice it. So 6% based on last month and 6% based on last year. But of course, July of last year was really when we were just beginning to get our systems in place and people were out looking.
So when we talk about a buyer's market versus a seller's market versus a neutral, we have it here, you know, buyer's market's more than 6 months of inventory based on closed sales. Seller's market is less than 3 months of inventory. The neutral market is in between. So you're seeing it's still a seller's market, but the inventory is kind of creeping up. Is that what you're seeing?
It's creeping up a little bit. I mean, we're still at less than a month's worth of inventory. So we're in a very strong seller's market. But as I said, we're beginning to see some price points where the inventory is increasing more.
Is that on the lower end or the higher end?
I would say it's at each end. The middle is, yeah. So I would say the very high end, we're beginning to see more inventory and sort of less sales happening. And then also at the lower end.
Susan asks, do you think mortgage interest rates are going up anytime soon? Darren, Lynda, you can chime in on that. I have my own thoughts on that, but what are your thoughts?
I mean, we've actually seen them come down in the last couple of weeks. I think they're going to range between high 2s to low mid, like 3.5-ish. I think we're going to see a year of about that, unless there's some significant world event.
Yeah, I think the Fed's been committed to keep them low, but I foresee sometime in the near future they'll have to go up. I think the economy is going to dictate some of that.
Who knows?
Yeah, it's a crystal ball, right?
The crystal ball, right? Big
They
question.
want to keep them down, and I hope they do. But We'll see.
Yeah, who knows? All right. So average price per square foot, it's going up. That is I'm looking at this. That is a huge jump.
Mm-hmm. It is a huge jump. As I said, it's 30% since last year, which is massive.
That's huge. I mean, because I think that is in a sense, probably it's not so much what houses are selling for, but it's the per square foot price. I think that is one of the most relevant metrics. Is this because more smaller homes are being sold, or is it just across the board? It's because smaller homes tend to have a higher price per square foot.
That's a good question, and I'd have to dig deeper into the data for that. I would say definitely the lower end market has jumped up swifter than possibly the very high end.
And then we've got it going up. That's price per square foot. Wow, up 1% in a month, 28% in a year.
Right. Yeah, as I said, it's almost 30. That's huge.
What about Costa construction? Do you guys hear anything? I'm hearing construction costs are crazy high to get anything done. You know, we just some people that our staff knows lost their home in the river fire. About half dozen people or different families or so. I don't even know how you would build something now. And I was talking to one of your executives at Keller Williams, and she had heard that the cost per square foot is $1,400 per square foot in Tahoe. Cost of construction.
It's going up everywhere. And I heard some builders have suspended or slow phasing out their new home construction because of the cost. They can't commit to the pricing points that they developed the product for.
And what's interesting is if it costs you, like if you're selling this house for $569 a square foot, could you build it? Could you buy the lot and build it for $569? If you can't, that means, you know, at some point they're either going to not build housing because it's too expensive to build, but then that's just going to drive prices up, or they're going to build it. I mean, I just see it trending up long term, but you know, I'm just a lawyer. What do I know? All right. Days on market.
Yeah. So you can see, I mean, again, we talk about homes selling within a 30-day time frame is always my goal. And we have a pretty hot market here. You can see, yes, it's gone from 10 days to 11 or whatever, but I mean, 23 was the longest. Oh, sorry, actually 27, I guess, was last July. This is swift. And really there's, we're having to do a lot of pre-marketing for the seller so that we build up a lot of interest the day that they're able to show property. And then typically they were setting an offer date so that we'd have time for buyers to come through and receive the offers. So that's why you're not seeing, it could have been 0, but our goal is always to get the best offer. So we want an opportunity for as many buyers to come through as possible.
Yeah, maybe if you can talk about that, because when I see the sales price, when I see that this short term of days on market, I'm wondering what you do in advance. So advance of listing a property, are you getting the inspections done? Are you getting, whatever you might do typically after you're under contract? Are you doing those things before you come under contract, quite frankly?
Yeah, right now we're definitely doing them prior to going on the market. Okay. So that when a buyer's looking at the home, they really know what they're getting into. They can buy the home as is, which is that phrase that sellers like to throw out. I want to sell my home as is. So if you're going to sell it as is, you really have to tell them everything you can about the property. Okay. So we're getting all the inspections done. Depending on the home, let's say it's an older home, we may end up getting sewer lateral done as well. Some of the cities require that for pre-sale. Maybe the roof is a little older, so we'll make sure we have a roof inspection or a pool inspection if they have a pool. So we're really providing all the data up front before we go on the market, and also sitting down with the seller and making sure they have a very detailed disclosure package put together where they're really giving a history of the home, not only any defects, but they also get to share anything they've done to the home to improve it.
And I think, Lynda, you're highlighting the importance of, because I'm looking at this and I'm putting on my consumer hat. If I go, well, gee, if the average days on market is 11 days and it's going at 100%, 110% of ask on average. Can't I just, put the house on Craigslist or whatever, or list it myself and save the money on the commission? But the realtor organization, they've said that houses trade at 13% more if they're on the multiple listing service than not. And I'm just hearing the value that a real estate professional adds to a transaction. You may not even get the deal closed if you try and do this on your own. So I would say, for people watching this, this is not an invitation to do this on your own. A real estate transaction is a complex transaction. And I will tell you, if there is a downturn in the market, when there was a downturn in 2008, I had so many clients reach out to me that had sold properties, and they said, the person who bought the property wants to give me the property back, right? And me give them the money back. And, that's not going to happen. So it's good to have a real estate professional involved. Average days on market. So it looks like it's down.
Well, it's really only down a day. I mean, it's just ticked down a little bit. It'll be interesting to see what August numbers are. I think we may see that figure going up a little bit, but it's still going to be a lot less than 30 days. The other little piece that we're doing, I think, to make the days on market short is we have kind of a coming soon status, which isn't counted in our days on market. So typically marketing the home as a coming soon for about a week before we're live, and it becomes a new status for buyers to actually be able to see the property. So that's our kind of pre-marketing time where we can share inventory about the home among other companies and among our, the population.
Is that something that's done all over the state, or is that kind of unique to the Bay Area, East Bay?
Well, I know it's definitely part of Contra Costa Association's rules. It's our cooperation policy. So we are not allowed to discuss a property with another company until it's marketed as coming soon. So we can't do any, coming soon postcards or anything on the internet unless everybody gets to see it at the same time. So they're feeling that creates a more even field.
And so the idea behind the coming soon is get market exposure, get people excited. They can kind of get their head around, because a lot of times people are buying this home to live in. So they have to get mentally around, okay, I can live here, rather than being forced into a quick decision if it's, it hits the market and you have to decide that day, sort of thing. Is that the idea?
Yes, definitely. And it also gives the sellers just that little bit more time. Typically, we're not going live because they're not quite ready yet. Maybe we're waiting for an inspection report to come in, or they have some cosmetics that they're doing inside the property so that we're picture ready.
Now, is that coupled with it's pre-sale, it's coming onto the market and then you list it? Is that sometimes coupled with this will be on the multiple listing service for 7 days, and we will kind of, the cutoff date for offers is 7 days out kind of thing? Or does the pre-marketing replace that cutoff of receiving offers? Do you know what I'm asking?
No, it's not replacing it.
Okay.
No. Yeah. Good question.
Interesting. Look at this.
Yes. So this is an interesting chart, kind of shows, this is an average of homes that are actually for sale is beginning to go down a little bit. So that doesn't necessarily mean that the prices are going down. It just means that the average home that's coming on the market has been less. And we're still looking at that average price as being $1,310,000 as an average in Contra Costa County.
That's a lot of money.
Yeah. And then the average home that's selling has actually, increased from last year. You can see there's quite a big increase from 861,000 as an average to 1.25.
You guys have both been in real estate a long time. Could you ever imagine the average home being over $1 million when you started?
No. I mean, I actually sell in a particular neighborhood, and when I first started selling them, they're around 100,000, and now they're selling for over 800,000. And of course, they're 32 years older. So,
okay, so this is another interesting one. Months of inventory. Why is months of inventory important? What's that indicating?
Well, that's a good indication for sellers. The more months of inventory that we have, the longer it's going to take them to sell. So as we talked on a prior chart, if we have, less than 3 months inventory, it's definitely a seller's market. So the more inventory, obviously they have more competition. Now, when I'm actually working with a seller, I will actually narrow this in very much to their price point, because this, of course, is all of Contra Costa County. Right. But if someone has a home to sell, let's just say it says 500,000, I'll very much look at that 500,000 market and see, well, what is our months of inventory? How much competition do we have? And that's the best indicator of maybe additional repairs they might want to consider doing to make their home more competitive, pricing strategy, etc.
It's interesting. Maybe if you can talk about making not necessarily improvements, but repairs. Because if I'm a first-time home buyer, for example, I may not have money to put into the house, right? So that you mentioned having a pool. It's like 50 grand to put in a pool or whatever it is. A lot of people, they have money to get in the house, but they don't have money to put in a pool, right?
Yeah.
And that's expensive.
And you've got to
money.
wait a year right now, apparently.
Well, right, yeah. But because sometimes people will say, does it make sense? I mean, these are just questions clients ask me. Mom and dad pass away, you're going to sell the family home. Does it make sense to remodel the house? And what are your thoughts on that?
I think it's a great question. My concern always is that we spend 6 months remodeling the house and the market has shifted. So I think there are definitely some basic things that always give a great return on money, and that's definitely paint inside and out. Flooring is another key one that brings back the funds more than double. And then it's sort of a case-by-case basis. So I think sometimes as I said, you can end up putting 40,000, 50,000 into a kitchen, but it's taken you 2 to 3 months to achieve that by the time you get a contractor, etc. And I don't really know where the shift is. So I'm going to analyze what's the market like for a home in that condition. And right now there's definitely a market for flippers. Those homes are flying off the shelves. And sometimes you're better off just leaving it in completely its state with all the inspections done and price it for where it is right now. So sometimes I know that people who are selling a home that was mum and dad's, they want to have a certain pride and they want to improve certain things. Yeah. But I think like landscape cleanup is another great one. So it has good curb appeal, and definitely have the inspection reports.
So these are a whole bunch of numbers.
Yes, this is
that we base these graphs on.
Summary of everything that we talked about, really.
Talk about absorption rate, because we did mention that is.
Yeah, so the absorption rate is the number of homes on the market versus the number of homes that are selling, and how long is it going to take to absorb the number that we currently have on the market. So at the moment we have a deficit of homes. So that's why we're in a seller's market, because the absorption rate is so high. As more homes come on the market, then we even out more. And of course, if it goes the other way, then it starts tipping to be a buyer's market, because there are more homes for sale than there are actually closing.
Well, thank you, Lynda. Thank you very much. We're going to close the chapter on residential. If anyone has any questions, go ahead and put them in the Q&A. And now we're going to turn to Darren. Darren is a real estate broker and an engineer by training. So I know there are a lot of engineers. I recognize some of these names, a lot of engineers on the call. Georgetown University grad. And you're a certified property manager. You're on the commercial industrial side. And you've been working as a commercial broker for the last 30 years and with Keller Williams since 2013. So Darren, what is going on in commercial and industrial? So this does not include multifamily, correct?
Well, we'll speak about multifamily.
Okay, all right. So
we're about the two ends.
We're not talking about a duplex or a single family. We're talking about storefronts, industrial storage spaces, whatever it is. This is what we're talking about.
So what's doing well right now, not surprisingly enough, is the industrial warehouse R&D space, biotech, the technology type spaces are still doing well in the Bay Area. And many of these were essential workers. We need product inventory. They didn't get shut down during the 2020. And so investors, Wall Street investors, like this product. As a matter of fact, a lot of office REITs have tried to design themselves saying that we're going to buy industrial space because it has one office in it. So they're redefining how they're going to try and get into that market, if you will. So those were good through 2020, are still very good right now. And delivery, transportation, the last delivery mile is driving some of that. And the other aspect that's driving it in the Bay Area, those were unfavored spaces in the past. And they were leaving the area. They were being redeveloped. They were being redeveloped into multifamily or mixed use facilities. And a lot of communities didn't want that kind of space in their area. And they were being pushed out to Tracy and farther out. So lack of inventory and the fact that they were survived the 2020 pandemic and our reliance upon transportation and the Amazon Prime and delivery models have all generated that. What's not doing so well is retail, restaurants. Retail was already under pressure. The brick and mortar stores were under pressure because of online purchasing. Many of the big ones were moving in what they call omni-channel retail, which is where you would buy a product online, pick it up at the store, go to Macy's and pick up your purchase. So they're redeveloping themselves already before the 2020 shutdown, but now they're struggling through that redevelopment. And offices, of course, because the spaces were now remote. So shelter in places had a big impact on those markets, and it remains to be seen how it's going to shake out. I don't think most everybody believes that a flex schedule or some kind of a remote working in place is going to continue. And then most of the tenants that are looking at space now for releasing or acquiring are looking to downsize. They're going from 15,000 square feet to 7,500 square feet. And they're trying to figure out how that's going to flow. And they're working on short-term leases. Average leases in the past would have been 3 to 5 years. Now they're looking, hey, get me in for 18 months because I don't know what the future is going to hold or how I'm going to use my space and what I'm going to need, how we're going to set it up. So that's what we're seeing. There's a lot of activity that picked up in that market. This is a slide that shows, and I'm using office as an example. Right at 2020, you can see where it fell off, and it's half the rate of leasing activity as it was since the last 15 years, except for the last quarter. In downtown Oakland, PG&E moved from San Francisco into their new headquarters in Oakland at 900,000 square feet, and that's why they have that one big bump. But other than
that was one deal.
Yeah, one deal drove that.
Yeah, so that is not a trend.
No, it's an outlier.
Yeah, and that was in the works for a long time. I would presume.
Yeah, they closed it out. So that's what's indicative of these soft spaces right now. Is what does that look like? Retail is no different. This is the subspace, the sublet space that's coming on the market. These are corporations or companies saying, we don't want this space anymore because we're not likely to use all of it. And you can see how it's peaked up since the beginning of 2020. And that space has to get absorbed into the market too, before there's going to be some kind of a rebalancing.
So what happened in 2018? Because it's kind of, that graph is going one way. And when I look at that, I'm not seeing COVID really affecting.
You're seeing companies leave the Bay Area.
Okay.
Right. Not all companies, but leave the Bay Area. For instance, Facebook, they're building an $800 million facility in Nashville, Tennessee. So they're not necessarily leaving the Bay Area, but they're not rebuilding in this area as expanding as much. Okay. And there's a number of companies who have and will continue to leave the Bay Area. Part of that's economics, it's employee driven, whatever the reason, but that's what you're seeing.
Yeah, let me ask you about that. If you're running Facebook and you say, hey, we need to expand our capacity, it's not that they're leaving the Bay Area because it's a bad place. It's just there's a lot more people in Nashville to hire, right, and land to build, because you're really kind of tapped out. I mean, we saw Lynda, the housing supply in Contra Costa County, I mean, is so low. You can't even hire the people because there's not enough people to hire.
No, you're exactly right. Quality of life, availability of the workforce are strong reasons why these companies locate in the markets that they do. And that's why they're moving to Austin. That's why they're moving to Nashville. That's why they're moving to other places outside the area. Cost of living is another good example. People can afford to be able to live where they go.
Yeah. Darren, Michelle asks, does Cisco, the tech company, own its office buildings or rent them? I saw lots of empty buildings around here. I'm assuming that's Bay Area.
It's
going on with Cisco.
Yeah, it's a mix.
Okay.
So Michelle, it's a mix. Different people have different spaces that they have, and they're returning product back to the line. So it depends on what specific facility you're talking about. Now, here's a new trend. I mean, there's a trend going on from an investor standpoint, and you have a lot of the REITs who are moving into buying complete subdivisions, single family homes, and buying them as rentals. The millennials and the Gen X's who are filling the workforce are drivers on how we're going to use our commercial real estate and even our single family homes in the future. And their lifestyle sort of aggregates around being long-term renters, and they don't necessarily want to be long-term homeowners. And that's their nature. And the 2008 downturn sort of solidified that when they saw people like Jim talking about, oh, I want to give the house back. Mm-hmm. They have certain lifestyles. You can look them up, but that's their preference. And this has been recognized by a lot of the REITs. And they have started moving into this. BlackRock went out and just bought a whole D.R. Horton subdivision, brand new outside of Houston, Texas, 124 homes, and they bought it for $32 million. And they can buy those all day long. They have the money to do it.
So to be clear, these are investors buying entire subdivisions of single family homes. So the whole subdivision is tenants. There's no homeowners in the subdivision.
That's right. That's exactly right. And they're also in these urban markets buying product in our area. So it's not just buying subdivisions, but they're coming into our area and have been buying at an overpriced value because they see the long-term rental market coming in. We expect by 2030 that the percentage of residential real estate in the commercial side of the business to have grown as a proportionate share. So it's going from where it's down about 10%, they expect that to shoot up to 25%. And that's
so Darren,
long-term rentals.
Another thing there, there've been a lot of changes in California, and Lynda and Darren, both of you, there have been a lot of changes in California law, parent to child transfers. And we had a question earlier on that. And, it used to be when people would inherit rental property, many times it wouldn't be reassessed. And so you would keep your Prop 13 taxes low. And I will tell you for the people on here, because I do recognize some names that are here today, they're clients. And I know that they're landlords, and I will tell you that they're not necessarily professional landlords. They might have 5 or 6 doors, right, that they're renting out. But I think a lot of times, and my parents have rental property, a lot of times people have a big heart and they might be charging market rent. They may be saying, well, she's a school teacher and, she does a really good job. And yeah, I could raise the rent, but I'm okay renting for less than market value. And I will tell you, this is actually really common with clients. They're not charging market value. What's going to happen when these properties get reassessed, when the parents die, they can't afford to keep them, an investor buys them. What does an investor do?
Well, the investor is going to raise the rent. They're buying for rental, right?
Yeah.
And that's going to happen. But the other aspect of that is that, I own my own property as well, is that I always try and, right below the surface of what market is, because I don't want to factor in what we call the turnover costs, the vacancy factor. You got to come in, you got to do a bunch of work, you got to get it released. There's another things that you have to factor in on that. So being right at market's not necessarily always the best choice, but being close to market should be. And the other aspect is, free advice is that if you can get your tenants on a schedule that every 6 months I get a nominal increase, it's 25, it's $50, whatever that number is. It's much easier to absorb than waiting 2 or 3 years and give them a $250 increase. So it's one of the things, just, sort of ease into it, if you will.
So Mark shares, he says, not a question. The average home cost in Davidson County, Nashville, Tennessee is $400,000 or $242 a square foot. So,
but it's going up.
It's cold in the winter and it's hot in the summer. So
my son just moved to Nashville. He bought his 3-bedroom, nice home, 2,000 square feet. I think it was $300,000. Now it's at $375,000. So I will tell you that all the markets are in design where people are moving, relocating, are hot. And so it's all driven by this stuff.
And if you think about it on a high level, it's a bad thing. Maybe people working remotely that are having a high paying job and they used to live in the Bay Area and now they moved to Tennessee. Well, they're taking that income with them and kind of spreading it out across the country, which probably is not a bad thing as a nation.
Yeah, but what also is happening, two things along that front, remote workers, is that one, corporations are coming out saying, now you're not going to get New York prices in Tennessee. If you want to work in Tennessee, you get Tennessee prices.
Right.
That's happening. And now they're clawing back. There's a lot of people who have these expensive facilities they need to maintain. And they say, well, it was great that you worked remotely for a while. But that was only a choice for you to have during the shelter in place. Now you got to come back. And then the other aspect to it is it's creating a really big problem with payroll taxes. So you're working in Tennessee, but you're a California employee. Well, you've got to realign yourself to become a Tennessee employee. So there's a number of other factors that these companies are having to deal with. There is pushback. I know a number of people that I deal with quite a bit in some of the larger corporations, and they say they're getting pushback from their employees now. Before the Delta variant was coming in, or Lambda, whichever one, they were already putting a play in saying that we want you in the office 2 or 3 days a week. We want to see how we're going to get this. And people have become accustomed to working remotely. And so they're liking that. So there's got to be a balance. But I'm not sure that it's going to translate that you're going to get what we call the coast salaries to go into the interior of the United States and start to live in that kind of an environment. So,
well, I guess it depends on the role that you have, because some jobs you don't necessarily need to be physically present,
right.
and others you do. And it's a competitive market. And, I think it was Bill Gates who said, a top programmer is worth 10,000x,
right,
sort of the average programmer. So it probably depends on the person, I would think. But, if it's a fungible job where you could be replaced by anyone, I see that the argument of paying lower salaries. So a lot of people beat up on California. I mean, I happen to be California native.
right.
I'm not going anywhere. I love it here. A lot of people leave. A lot of people come in. 40% of Californians were not born in the United States. And Lynda, you're one of them. So we're 16 million. This is really amazing. 16 million immigrants in California, state of 40 million people.
Yeah.
And my wife and I adopted our two daughters. We have a son and 2 daughters, and we adopted our 2 daughters from Russia. So we're kind of that, 3 native Californians, 2 born outside of the United States. But let's talk about the good stuff that's going on, and people are still investing in California. Maybe you can talk about these deals, and these are big deals.
No, right. So Hines, I spoke earlier, this happens to be an industrial property. They're making of the warehouse space, the delivery. And so that's still hot. We expect it to be hot nationwide, and it's more hot around here because of the lack of inventory. There's new buildings that are being built now in Hayward that are being developed about that. So that's a great space because we're not all vacating the Bay Area. And the jobs are here. There are good jobs that are still here. It's high tech and biotech. Those are big engines for us. And so commercial real estate's all about the job market. And so these people are seeing that. That's why the biotech sales in Hayward, it's very, very strong. Emeryville is another great spot. That's becoming a high tech biotech corridor. So that whole spot in that area down there, that's going to solidify some of the investments. And then everything's going to build around that. Multifamily, the needs for residential, other commercial spaces, whether it be office or restaurant and retail, because people want what they call the walkability factor. When you're working in these places, you want to be able to go out and get a lunch real quick. You want to walk down the road. You don't want to have to jump in your car and drive. It's all about the walkability and less mobility by automobile. So that's how the market's shifting. There's a huge projection by 2030, we're not going to be driving our own vehicles. We're going to have autonomous vehicles drive us everywhere we need to go. I believe it because that's 8 years away, but that's the mindset that everything's building around. And so that's what this Cal Center Properties purchased this one in Emeryville because of the biotech industries that are going around. They're going to start to come in and make this an entertainment hub. Restaurants are going to redevelop the whole property that has shopping in it right now. So that's how retail is also reimagining itself. It's no longer about buying something, but it's about the experience. Another tie-in to the millennials. They like the experience of stuff. Back when I was growing up, the experience was walking the mall, see what you can find on sale, right? That's not the experience they're looking for. They'd rather walk the trails, have it ordered, pick it up, and then maybe go out and, catch a dinner or something like that and explore outside. So it's a shift. And the 2020 shelter in place has just really catalyzed that. But the Bay Area is still with the right niche and what's going on. San Francisco starting to come back in. Retail space was completely vacant. Now it's one of the hottest things going in San Francisco.
Because I've been in San Francisco several times during the pandemic. I noticed kind of around Union Square, a lot of closed retail. What's going back into the retail? Is it just new retail?
That will follow, but the restaurant type space, retail incorporates restaurant as a group, but the restaurateurs are starting to try to get back in. They're anticipating. Everybody's trying to plan what the new normal is and what that looks like. And so they'll all shut down. So now those leases, because they're longer term, it's not like it's, hey, I'm doing it next month or closing on a home. You got to plan these out, but it's a hot market. Oakland is a hotter market because of the things that they anticipate happening there.
And I see a client is attending our webinar here who owns a couple of hotels. Tell me about hospitality. Is that long-term? Is hospitality, is it thumbs up? Is it neutral? And near term with COVID, I mean, and this is not really a COVID discussion, but I just look at historically, like the Black Plague went on for 2 years. Okay. We're not through with this yet, right?
No, we're not. We're not. We're figuring out what the new normal is.
Right. Yeah.
And Jim, I have a client also who buys and develops hotels, and he's just completely sitting on the sideline. And he took it in about all the shelter in place. It just like shut everything down. I think with that market's still struggling. I think people want to get back out and travel, and they want to go places, but some people are reluctant to go into a mixed facility, if you will.
Yeah.
The other thing I'm hearing is the labor. A lot of people are having hard times restaffing the hospitality industry with labor and the shortages. It's impacting restaurants as well. I just recently returned from a wedding, and it's the same thing at the hotel we stayed at. We had difficulty getting our room service, but it wasn't because they weren't trying, they just didn't have staff. So that's going to impact it as much as the traveling and any concern about, the variants, whatever. But I think the bright hope is that most people, I think, are reaching a point to where they want to get back into society and travel. And so I think it's a little distance off.
So let's talk about office space and use of office space. I mean, what I'm asking myself, because we're tenants in several locations, as we were going through COVID and looking to come out of it, my thinking was, what is an office for and who is it for? One of the concerns we have when we took on new people, how do we train people? That's one reason to have an office environment. Are you seeing that discussion in the office space where people are really re-examining what happens in an office? Because I'm not sure an office is for work as much as it used to be, right? You look at we're on Zoom right now.
Right.
Just so everyone has Zoom. I'm talking to people in their 90s.
Right.
They've figured Zoom out, right? And sometimes a meeting is more efficient by video because you can screen share and you can see everyone's face, and it's more convenient. But what's the conversation? What are you hearing about the use of office space?
Yeah, so that transition, so the reimagining of the real estate world started. There was a good article published by, I think it was Cushman & Wakefield. If anybody's interested, you can share your information. I'll send it off to you. But they imagined what 2030 would look like. And the office space is not traditional like we know it now. They envisioned that it would be more of an entertainment, a mixed use, a hoteling arrangement. People would come in, you would sign up for what you need with whatever your company was, and you would have big open spaces. You wouldn't have a cubicle. We're not going to be in the officing, if you will, traditionally speaking. So it's all about that experience. It's about what the worker's going to want and how they're going to perform the best with. And that's what's driving it. We're seeing a lot of redevelopment in that. They also have included what they call the ESG. So the environment is coming into this whole aspect of it. Carbon capturing, it's better work environments, it's better HVAC systems with outdoor air. So it's about the experience, it's about the gardens, it's about some of the stuff that you'll see that's being built in San Francisco going, oh, that's pretty cool, and I feel good with that. So that's what's happening in the office. So you're going to see a transition in that space in the next 8 years, and the shelter in place is kicking that off because you got to recapture these tenants. The other thing that you're hearing in the survey during the shelter in place was, well, are people going to want to go back to the office at all? And the answer was yes. It'll be different. And you hit the nail on the head. The C-suites, the executives were all happy from working remotely. But it's the middle managers and the new interns that wanted to get back in the office the most, because there's a lot of things that are learned through the water cooler. Popping your head in real quickly and saying, hey, Jim, did you take care of this real quick? Versus trying to catch everybody on a text or some kind of an email or Zoom call. And the other aspect to it is that some of the newer hires don't have the facilities where they live to be able to have a separate office and the luxury of working in that.
You know, Darren, I'm glad you mentioned that because, you know, there are a lot of business owners watching this. When we worked from home, like I have a nice house and a nice place to work, and you guys have, it looks like you're at home as well, and you have nice places to work, right?
Right.
But your point, Darren, some people, like it's a mom and dad and 2 kids in a 1-bedroom apartment.
Right.
And then also when you see how people live in cities, you know, San Francisco, typically, like you're going to live in maybe a smaller place, but you spend all of your waking hours outside of your house, right?
Exactly.
Right.
That was the lure of living in the city, was that you didn't just stay in your room all the time.
Right.
And many of those people, they vacated to bigger spaces or to, you know, Tahoe, or they went back home if they were younger and they were living with their parents in the bigger places and working from there. So some of that's still going to happen. And I think that's a drive of how people relocated and found out what their value was. And
Lynda and Darren, I have a question for both of you. And it's about working from home. I've heard a lot of anecdotes about people who just moved to Tahoe when COVID hit, right? Or they just moved and they remoted in. And now their companies are saying, look, you have to be in 1 day a week. And I think that lets people move from the Bay Area to maybe the Western slope of the Sierras or to LA. I don't know. And they fly in 1 day a week or what. Are you seeing any of that materialize with your clients? Maybe you can put some color on that.
Yeah, I definitely have. I mean, I've had clients reach out and say that they might just be looking to buy a studio where they're there a couple of days a week, you know, rather than at least they have kind of a home from home. But they've definitely moved to what was their second home, for instance.
And Jim, to that point, back in 2020, my hotel developer met with his law firm, and they just recently, I think at the end of 2019, had taken 3 floors in an office building in San Francisco. And of course, they got shut down. They had 40 partners, and he did a survey in July 2020 asking the partners, when did they anticipate wanting to come back in? What would that look like? 37 of them responded, I don't want to come back in. I'll fly in to see my clients. They were in Idaho, they were in Tennessee, they were in Texas, they were down in Scottsdale, and said, I'm more efficient working from home. I'm getting more billable hours, I'm getting more done. And if I have to come see my clients, I can jump on a plane real quick. So that is happening. That doesn't happen to the intern that's new.
Right.
No,
so
you're right. The other thing I wanted to bring up was I was thinking about a lot of companies attract employees because of their culture. And I think that's hard to establish when you don't have a physical place where everybody's going to. So it'll be interesting to see what innovative ideas company managers have to maintain the culture that they had, which attracted the employees in the first place.
Yeah, but I would speak to that and agree with you, Lynda. I think the technology field has a leg up on a lot of us because they've been doing that forever. My wife works in technology, and her teams have been from Chicago to Boston to international. And on occasion, they would meet in a local location to visit, but they weren't in the same office. Even when they would go into the office, they were still remotely working. So it's going to be interesting how we adapt that. Real estate's typically been lagging in that. I mean, I'll be honest, I didn't use Zoom and Teams until March 2020, right? I always like to be in a meeting. It was just a lot more effective for me, but that's not the way.
Our youngest daughter is 22. And I used to kind of make fun of her because in high school, I never saw her on the phone. It was always FaceTime. And now I don't like to talk on the phone anymore. I want to see people. So maybe it's working its way up. So if you're watching a recording, subscribe to our YouTube channel. We're going to open it up for some final questions before we close out today. But Darren and Lynda, I want to thank you for taking time to prepare for this and take time with all the people who are attending here and watching on YouTube. This is just great information. I know we kind of took a couple of paths there on how COVID and, coming out of COVID, hopefully, what that looks like. I do have one kind of pet peeve. So for those of you who do have hotels in business areas, it sure would be nice to leave your suitcase with stuff, like check it into bags. Do any of your clients do that, Darren? Any of your hoteliers, do they let you leave if you're going to be there one day a week or something?
Yes. And by the way, Jim, that's what that new office is envisioning. Imagine integrating hotel, the new office, whether it be in a RB&O, whatever you want to imagine. It's a migration of all those experiences.
So you never have to leave the office, literally.
Exactly. So you would just pop down and do this and do whatever, and you'd have different spaces, if you will.
Oh, nice.
So that's how they have to reimagine. It has to reimagine to what the new worker is going to require and how they're going to migrate, and use space.
And that's really important for business owners, because I think if you want to hire the absolute top talent, that person may say, I don't want to live in San Francisco. I want to live in Idaho, and they're coming in.
That's
right. And that's just how it is.
It's no different than the technology companies. When they were hiring people, they would bring in chefs. They still do bring in chefs to cook them lunch, and they do all kinds of great things. It was very important. Now, of course, that's because they didn't want their people leaving, going off site, work, and for a 5-minute break, they went down, got lunch, and they were sitting back at their desk. Another big thing that's coming out is all the millennials and Gen X's love pets and love dogs. So there's been huge accommodations, even in the Salesforce Tower, of allowing certain spaces to be dog friendly and putting in, and they had designated a special elevator for these people to go up with their dogs, because they found that if they could allow these people to bring their dogs, they would stay longer to work. Otherwise, they were all leaving at 5 o'clock to go home and feed their pets.
Right.
So they're very pet friendly. It's a big thing in the multifamily. A lot of big apartments are putting in dog washes where they had no pets policies. They're allowing dogs. 60% of the single millennials have pets. So it's just a huge change in the way that we're approaching these things.
Bill asks, 5-acre ranchette in Contra Costa County, or Contra Costa, what is that value? Seems prices aren't appreciating as much as single family homes on like a 5-acre lot.
Yeah, I would agree. I think it's just the number of buyers that appeals to. It's a limited pool, so that would appreciate at a slower rate.
And depending where it's located, it might be a development opportunity. So,
true. Yeah, right.
Yeah.
Well, thank you very much for joining us today, Darren and Lynda. It was a pleasure to spend time with you and talk about real estate in the San Francisco Bay Area. So
Great.
thank you again.
All right. Well, thank you
very much. It's been a pleasure.
All right.